Howdy y'all, Tony DeNaro here. Welcome back to the channel. A very quick market update for you for Friday, March 17th. Sorry, this one can't be longer, but the wife and I are getting ready to head out to the Austin Rodeo and a concert. In tonight's video, we're going to touch on a couple topics very quickly. Bed Bath & Beyond, the reverse split that just got announced and what that is doing with the stock. What Finra said today about MMTLP. What's going on with the bank situation? What is the Fed going to be doing into next week with interest rates? Many of you are still asking me about AMC and Ape, what to do on that. I'm going to touch on that briefly again. And finally, we're going to close talking about Pax Media, ticker symbol PXMD, because some of you are asking me about that one. I got one tip for you on that. Let's kick it off. All right, let's start off with Bed Bath & Beyond. There was a press release on Tuesday, the 14th of March, talking about an update to the equity offer agreement. I didn't report on that one because what's the point of beating a dead horse? We already know that Bed Bath & Beyond is raising money and that there is dilution coming. Use extreme caution, guys, if you are in this play at this point with Bed Bath & Beyond being on the doorstep of bankruptcy. This play is for the most degenerate gamblers only. It's not on my recommended list. But since some of you are in it, there was an update to the price failure threshold to $1 until April 3rd. Again, they need to raise money. They needed to reduce that price failure threshold to continue selling stock, this preferred shares. Let's move now and talk about the news from today. At the end of the day today, we got an announcement that Bed Bath & Beyond plans to have a special shareholder meeting to approve a reverse stock split. This will be in the range of 1 to 5 to 1 to 10. The holders of record as of the close of business on March 27th will be entitled to vote at the upcoming special meeting. The last time I covered Bed Bath & Beyond, I think was around the 7th of February, saying, this was going to go down into the toilet due to the bankruptcy and the massive dilution that's going on. It's dropped from what, $5 to $7 at that point down to about $1. So good call on that. However, now we have this reverse split of a company that is on the threshold of bankruptcy, and the market didn't like that. And after hours at this point, it dropped as low as 75 cents, currently trading at 87 cents. I know some of you are going to look at that as a buying opportunity. That's on you guys. Personally, if you ask me, a reverse split is really not the issue here. As always, it is the threat of dilution that is the issue. That's what you should be focusing on. They want to bump up the price, so much like AMC, they can sell shares at a higher price. I get it. I got no problem with that. Reverse split is not the issue. The dilution is the thing you should be watching for Bed Bath & Beyond, and it's just a matter of time, probably at this special shareholders meeting, where you will get an update on what the actual share count is on Bed Bath & Beyond. Next, let's move on to Finra and what did they say about MMTLP. I'm not in this play, but some of the people in my Discord and my viewers are in it. If you are in MMTLP or NextBridge, you probably already know this news, but this is a matter of interest for everybody, I think. Back in the latter half of 2022, when MMTLP was running up and I was doing live streams and people were asking me, what do I think? I said, sell that baby at the peak. Don't wait for it to go down because you're going to get stuck with these positions. That's water under the bridge now. I don't want to talk about that anymore. And I wish everybody that is fighting Finra with your NextBridge shares all the success in the world. I am following the play, which is why I know about this one. But why did I say to sell your shares back in September? I tried to educate a few people. A couple of y'all listened, but most did not. That's cool. I tried to let you guys know that the shorts were not going to have to cover. Now, yes, Finra did do MMTLP stockholders dirty. I get it, the halting of the trading and all of that. But the point is, the shorts were not going to have to close their positions. That was a failed due diligence on the part of the people covering MMTLP. Item number 9, I'll put a link to this in the video description. Number 9, what happens if short positions in MMTLP were not closed out before Finra halted trading? Broker-dealers have operational conventions in place for adjusting short positions following a corporate action. This applies to everybody, guys, not just MMTLP. I want you to listen to this very closely. In this instance, Finra understands that firms have adjusted short positions in MMTLP to reflect an equal size short position in NextBridge. And then in blue, the corporate action did not compel short positions to be closed. Guys, I know this is bad news. I know it's not what you want to hear. I want you to hear it, though, because there is a common myth in retail traders that all corporate actions must force shorts to close. It sucks, I get it, and you can leave all the hate comments you want down in the comment section, but I want you guys to be educated on the rules of the game, the rules that you're playing with in the market. But that is how you get out of plays, maximizing your profits when things run up instead of following some misguided due diligence that due to a corporate action, these shorts must cover. Moving on to banks, you can see on the heat map here, they all suck still. Guys, there is still a lot of risk going on with the banking sector. Do not underestimate the potential of this banking crisis to obliterate the markets. I am still staying mostly in cash this week. I'll consider doing some trading next week, depending on what news comes out over the weekend. And we have the Fed reporting and we have the Fed meeting on next week, the 21st and 22nd. We will find out what they're going to do with interest rates. The market expectation now is that Jerome Powell and the Fed is going to raise rates 1/4 point. Stay tuned. We'll be covering that next week. Moving on to AMC and Ape. After the vote that was held earlier this week, we also got a filing that Antara sold 48 million shares. I know a lot of you are wondering, how can they do that? The volume of the day wasn't even 48 million shares. There is a chance that they sold that direct to another party or did some sort of block trade. Not everything goes through the tape or through the market. So that would be my supposition. I don't know. I haven't looked into it that closely. Doesn't really matter to me. I think we all knew that Antara, being the profit-driven company they were, was going to start selling shares as soon as they could once they were out of their lockup period right after the vote. You should be paying attention to the fact that Antara still got, what, close to 180, 200 million shares to sell, and I expect them to be selling them. That is why, despite what you hear on other channels, that Tony DeNaro is telling people to buy the dip, I am not saying that, guys. I have never been saying that. I have said that I do not expect the reverse split to by itself be adverse to AMC and Ape. We'll find out when we get to that point. But I do urge caution. I urge prudence in loading up on anything right now related to AMC and Ape because we have dilution. We have been talking about that message here on this channel for many, many weeks. I don't know where people get the idea that I'm saying buy the dip. I am saying exercise extreme caution. I'm also saying I am not adding anything to my position of AMC and Ape right now. We got the lawsuit risk, we got market risk, we got banking risk. Exercise caution, guys. If you're a degenerate gambler and you want to load up, that is your decision. You are not getting instructions from this channel to buy the dip or to load up before a dilution event. The company did what it had to do to raise cash. I have no problems with AMC trying to do a reverse split and sell shares. They have to fix the balance sheet. But we still need to be smart in our decisions now that that vote passed. So take that message for what it's worth and make your own choices. Do not get advice from people on YouTube or Twitter about what to do with your trades. Nobody knows your risk tolerance. Nobody knows the size of your position relative to your overall portfolio. I want you guys to have a balanced portfolio of many stocks, preferably profitable ones, and have a risk-balanced portfolio. All right, and to wrap it up, PXMD, Pax Media, a beautiful, beautiful play for anyone who has been in it since $1.40, running all the way up to $3. It came down a little bit today. That's fine. It's a great momentum play. Again, congratulations. However, you have come to expect from my channel when you ask me about these tickers, and some of y'all are, what should we be worried about when people are still pumping this play at this point? No, I don't know how high it's going to go. Ride it until the momentum stops. But here's the cautionary note of the day. The things that you come to expect from this channel, guys, the float is being reported right now at 1 million shares. There is a shelf offering out there. There's convertible warrants. And what else do we got here? Warrants, convertible notes. The same old story that we see time after time on these plays. Potential dilution up to 27, 28 million shares. So at some point, there's going to be a bag drop on people. You're going to get a filing. You're going to get an update that the float is not really what you thought, that the short interest is not really what you thought. So I'll leave you with that. You do what you want with it. Good luck in your trading in PXMD. And I wish you all a beautiful, blessed weekend. Off to the rodeo now. I will see you on the next video.